Wouldn't describe the last 30 days as really good in terms of the cattle markets. Several things going on. Let's kind of deal with the big picture stuff first. And you know, the hot topic really the last 18 months, but especially the last 30 days has been trade. And you know, recent development was certainly what China did in terms of policy and tariffs in particular on U.S. imports of multiple ag products, but pork in particular. And I think we talked a little bit last month when I visited with you. We talked about, you know, that we're moving some beef to China, but it's kind of been very slow to start. It's going to pick up over time. But you know, we already are moving a lot of pork to China. And we have to remember that as beef producers that, you know, we don't produce beef within a vacuum. So anything that impacts competing products, in particular substitutes like pork, has the potential to impact beef prices as well. So, you know, the pork market's been hit fairly hard since that announcement. It's been down quite a bit the last 2 weeks. And beef has responded some too. So as anything that can impact pork prices negatively has the potential to also have negative impacts on beef cattle prices. Fed cattle prices, for the mid to late part of March, I would have put them kind of in roughly the $1.25 per pound range. And it's not that they're necessarily down so much from the last month. It's more that we did not see that seasonal improvement in price that we typically see. Usually April's kind of our seasonal peak in the fed cattle market, and we didn't see that this year. So most of that's been taken away with these markets. So that's, I think, had an impact across the board on cattle. Thinking about heavier feeders here in Kentucky first, been a lot of variation, but if I kind of define a heavy feeder as something kind of in that ballpark of 750, 850 pounds, I would have called them anywhere between about $1.35 a pound to about $1.45 per pound for the month of March. And that's off some from where it was back in the fall. That's kind of where it's been recently. The calf markets have not responded in the same fashion, and I think a lot of that's been seasonal. If you just ask me what time of year our calf markets typically peak, I would say about this time of year, roughly about the first part of April, first half of April. So, you know, those calf markets for March kind of average somewhere kind of in that, you know, low 160 per pound range for a 550 pound steer, which kind of is my baseline. That's kind of where we've been. It's not at all atypical to see that price actually rise some when forage really starts to come on in the spring of the year. We should be at about that time right now. In the most recent issue of Cow Country News, Greg Hallich and I put an article in that we've put in the last several years. We talk about the basic profitability for a stock or enterprise. And what we always do in an article, we kind of look at, okay, you know, what are fall feeder cattle futures prices? What would it take a summer backgrounder, you know, to run a group of calves through the summer and sell them in the fall? And then we look at realistic prices for calves given an expectation of those costs. And what we generally find is that, you know, there's typically some room for profitability for some operations. We did that again this year. Like many years, I would say this, you know, there's still some room for this calf market to move up. I think there's some profit opportunities for stocker operators, but I think, as like a lot of years with the uncertainty that we've got, I think managing some of that downside risk is very important too. So towards the end of that article, we talk a little bit about contracts, futures and options, things like LRP insurance, ways that we can manage some of that downside price risk, because I do think opportunities are there, given the calf markets, but I certainly think the risk is there as well.